Hello, this is the chart profit video, approaching 90 minutes into the trading day on Friday 17th of June. Looking here at the pre-open, we're looking at the Emini S&P. We're still actually following the June contract. It's not the front month now, but I'm following it this week just to see where it sits relative to the important levels. We had a target at 2120, which was hit on Wednesday, the 8th of June up here. The Emini has come off that level pretty quickly, indicating this is likely an extreme of the distribution, as I suspected. We are in a situation where no selling has been marked for, no buying has been marked for a while, but significant selling was marked here below the major point of control at 2087. But that value area on the Monday of this week was actually printed just about above that level. Came below it, we rallied back up, and then we reached resistance at that point, which is kind of a negative pattern. It's a sharp sell-off the following day, but we came back very quickly on Thursday. I've been saying I'm not interested in the long side of the chart until we see significant buying marked above that level. I made a comment here in the pre-open. Once a week I review the important point of control levels on a 30-minute basis. Just confirm the major is at 2087, as we know, and the point of control of the current distribution is at 2041. However, the 9-month is at 2055. Let's just have a look at that. So I think I said 2055. It's 2050 spot 5. And we're looking here at the Emini price distribution on a 30-minute basis back over a number of months. And you can see the red line here being the controlling price. And this is close to the low, or rather a brief test of that low, on the June contract. Just to remind you, I did say the point of control of the current distribution is at 2041. That's the distribution off the February low, and it's sat there for quite a while. And if we now look at the distribution, you can see 2041 here off the February low. And since this week on this overlay chart, I've been including the data from the September contract, which is the current, and that was the low yesterday on that contract. Clearly now, as we move forward, if we see the September contract, which we'll update in the pre-open on Monday, if we see that printing below this level, that puts this chart immediately into a weak price location, and I would expect further downside. So a quick look at the hourly charts for the Emini. This is the Emini June, which has actually now ceased trading. So we have old data here, but this is yesterday's low at that 9-month. But here's the September contract, and this is really interesting that the September contract actually made its low, remembering that this is now the front month at that 2041 point of control exactly. So definitely now proven support. Price down here, as I've just said, would put the chart in a weak position, as I've just said, and I'd expect more downside there. This is the New York breadth chart. Daily breadth indicators through yesterday. These two indicators have now dipped below their important levels. Net new highs 25, 5-day moving average below 0, and the percentage stocks greater than their 50-day moving average just dipping here below 50. And that gives us this red area here on the breadth line. On the pulse chart, momentum is still positive, but has turned lower. This indicator has strong inclination to get back down to 0 once it started its decline. 205.40 is the time support on the spider, a little below yesterday's low. That will coincide very nicely with the level on the E-mini, so price here would be weak. One of the key charts that we follow is IWM, the Russell 2000 ETF. That's currently printing below its major in a weakened price location. Price back above here would be a sign of strength. All the charts I'm showing you at the moment, including that E-mini below 2087 and this one below 115.35, indicates weak price location. Important level on the Qs is 105.13. That's the major and the halfway point off the November high. It was support in April here, and currently we're above that level, so this is a stronger price location for the Qs. Price down here once again would indicate further weakness. This is the UK FTSE 100 from this high to the subsequent low over here. The halfway point here, we had a lower high which indicated real weakness. because it was right at that halfway point. Really seen a sharp sell-off, fears of the Brexit, the referendum vote at the end of next week on Thursday, really taking hold here, and a panicky decline. The major on this chart is at 58.70 down here. We didn't quite get there. With that vote looming, we might expect to see more volatility in this chart and others. Look at the sentiment indicators. This is my version of the RIDEX assets ratio. The ratio is still relatively low compared to where it was last year or before, but in the short term the S&P has been falling and the ratio has been climbing. And as I've been saying in the pre-open this week, that's not usually a bullish pattern in the short term. Looks like buying the dip from the retail traders, and they are consistently wrong, unfortunately. This is the bull funds in isolation, their assets in isolation, and you can see the little pop this week here in the bull assets, and the bear assets close to the April low, which was the low in the assets for many months. Well, 5 months. A little more money flowing out of these funds. We'd see a multi-month low in the bear funds. That's often a trigger point. Interestingly, in the AAII poll, the public poll, the bears this week jumped to 37.5% from 27.8%. That's quite a jump. That's now a 17-week high for the bears percentage of respondents declaring themselves bearish. And this week bulls came in at 25.3%, and that's up from just 3 weeks ago when bulls percentage reached an extreme low of just 17.8%, remembering this is a contrarian indicator. Looking at the Investors Intelligence poll, the newsletter writers, the bulls percentage here was slightly lower this week at 45.9 from 47.3, and that 47.3 last week was just below 47.4, which was reached 8 weeks ago. That was the highest bulls percentage since July last year, when the 4-week moving average of bulls minus bears, that black line there, just peaked above the previous peak back in November. That was up here, close to the point where we started that 3 or 4 week correction. The S&P has moved higher from there following that correction, but now the 4-week moving average is approaching again that recent peak. This will be watched. Data from Lipper US fund flows, the indicator that I formed from that, I show the 4-week flow in black, which is based on the numbers that Lipper US fund flows provide each week, which is a net inflow or outflow, and then we look for extremes. So we're coming up on that 4-week flow from an extreme down here, which is kind of corresponding to this low. That's rallying the 4-week flow. We had a net outflow this week of 3.4 billion. And that 4-week flow number is in negative territory, is climbing. Not really able to read too much into this indicator at the moment. Looking at the T-bond ETF, TLT here, broken above the high from earlier in the year. Not quite reached the high reached last year. Since the 3-year controlling price moved to 130.77, we've really seen a sharp move higher here. This is USO, the oil fund ETF. Quite a sharp sell-off this week, having reached a multi-month high previous week. Quite a correction. We're up a little today. Yesterday was quite a sharp down day. We're actually printing above the high yesterday. Longer term trend stays intact as long as USO holds above 1078, which is its most local point of control. As long as that 6 months stays in that position and we hold above it, longer term trend from my way of looking at things is still up. Gold came into its own. This is GLD, the gold ETF. Since we printed back above here, above the 118.22 major point of control, that little consolidation above that major level, having found its low here, which was the previous point of control, and we've come higher pretty quickly, taken out the April high. It's actually reversed, maybe briefly. We're back below that level. So gold coming quickly higher with bonds as a safe haven move, especially with the European markets off so hard over these Brexit fears. Looking here at the dollar index, we've had this level marked for quite a while now. The 2-year point of control at 95.25, and this week we have reached that level, and at the moment we're off that level, so it is currently resistance. That's proven resistance. Should we see price back above here, consolidating like we just saw on the gold chart, that would probably be bullish for the dollar. Right now, chart is kind of unclear to me from my way of looking at things. Next thing I do is look at the halfway point off the low, which comes in here. So in here, I'm not sure. Below here, I'd assume we're going lower in price. Up here, I'd assume we're going higher. This is the Euro FX chart. This was an important low here back in March last year to this high, the halfway point here. So for the last 2 or 3 months we've held above that level, which is technically good. 4-year point of control is at 113.13 here. So again, between these two levels, chart unclear to me. Price below here would indicate lower. Price forming a higher low, consolidation above there would indicate higher. Remembering that 4-year just recently migrated to that level, giving it more importance than it had back here. So finally we'll look at the British pound against the dollar. Most local resistance is here at 144.32. That's the 1 year. The halfway point off the recent low back in February comes in here, almost at 143, and that's currently, well, it's just today, a lot of resistance. We've been consolidating below that level this week. There's been some talk today about the Brexit fears calming a little. I'd be more positive about the outlook if we could see price back up here for the pound. Even better, back above 144.32 up here. Almost guaranteed at the end of next week we'll know the outcome of the vote, and that will likely set the direction for the pound over the next few weeks, maybe longer. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.